Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, August the 7th, 2017, and this is the Daily Report for Gold and Silver. Muted action in the precious metals markets with gold trading slightly lower on the day and silver in essence unchanged. First to gold, currently ticking down about $1.20 on the day. 1263, that would be basis most active August futures contract. Silver trading at 1625, as I said, in essence unchanged. And after last week's dramatic drop, the question is, how low can gold actually trade to? Dollar really not adding or subtracting to value today, with the dollar index trading at 93.31, putting it down about 10 points. Very, very subtle move in the dollar, but it's all about U.S. equities as the Dow Jones Industrial Average once again closes at a new all-time record high, 22,118. NASDAQ up 32 points at 6383, and the S&P up about 4 points at 2480. As a side note, crude oil, after climbing to just above $50, is showing some weakness today, off currently about 28 cents per barrel at 49.30. Last week's trading activity not only resulted in a higher high than any of the previous weeks, when the market tracked to a intra-week high of roughly 1280, it also concluded the rally, which began mid-July and had 3 consecutive weeks in which the market closed at a dramatically higher price than it opened on Monday. Today we have a slight downtick in the market as gold is currently trading off about $1.70 at $1262.80. And the question remains as to whether or not last week's lower pricing is signaling some conclusion to the rally that was so evident in the market for the 3 weeks prior to that. And all things being equal, it does seem rather likely that we will go into some sort of corrective action following last week's sharp sell-off. And so the real question becomes if in fact we're going into some sort of corrective wave at this point. And to that end, we have begun to explore what levels we're looking at. We talked about this a little bit on Friday, and in essence what we have created is a simple fib retracement. This retracement begins at about 1202, the beginning of this rally up to about 1280. That being said, we are still tracking and trading above the 23% retracement level, and should this level hold, and I find that to be fairly unlikely, but should this level hold, then we would see this market take another stab at 1300, because realize after 2 attempts, this attempt was an utter failure to take that out, really stalling at 1280. However, if it breaks below this particular price point, the level at the 23% retracement, I would look for the market to go to a minimum of about 1250. That is our 38% retracement, and it could be as deep as a 61% retracement, which would take gold pricing to 1232. And traders, based upon some of the technical studies that we do look at, there is a high probability that we will see a further erosion in the price of gold. And I draw your attention to this daily gold chart. It is of October gold, and on the bottom we have the Williams percent R. And the one thing that you can see is when we look at these series of tops, they correspond quite eloquently to points in which the market hit a high point and then began to sell off. We now have that once again. So my sense is that we will look for this market to go to at least a 38% retracement, if not a 61% retracement. And traders, as far as silver goes, we can see a very, very similar scenario in that of gold, in that when we look at our Williams percent R and look at these recent tops and how they effectively correlated to a sell-off in the market, we are now once again witnessing the market going into an overbought scenario, and I would expect lower pricing in both markets. Now, of course, we pulled profits last week on both our long gold as well as our long silver, and at least for the short term, my recommendation is to maintain a neutral stance with no active trades in either gold or silver. And traders, although we are seeing quiet activity in the precious metals markets, the same cannot really be said for U.S. equities. We're looking at the Dow Jones Industrial Average. We're looking at a monthly chart. And on this monthly chart, we can see the kind of steep upside exponential J-curve that we are experiencing in U.S. equities as they have really propelled themselves, not only last year, this being 2016, but really taking off once again this year as we are now at a new all-time record high in the Dow, 22,118. I would expect that trend to continue. And as we talked about over the last couple of weeks, my target right now is about 22,600 and change. And that is based on a Fibonacci extension from the beginning of this rally in 2009 up to the first top that came in just over 18,000. And it begins at about 15,243 after these two series of corrections back in 2015. And traders, lastly, do want to take a quick look at crude oil. Crude oil trading off about 30 cents today at $49.28 a barrel. Over the last, 3 to 4 trading weeks, we have seen this market move up dynamically from these lows that were exhibited back mid-June at 42 up till it breached $50 per barrel, this being 2 weeks ago. And then now what we're looking at is some defined and lower pricing breaking back below $50. My current target is $44.50 per barrel in crude oil. Traders, last week we exited our long gold and long silver trade, getting out of our long gold trade on Thursday, and Wednesday is when we got out of our silver trade. We've had the weekend to digest the numbers that came in from the jobs report, and it seems that the probability of a third rate hike this year is much lower. For now, we want to remain flat with no active trades in either gold or silver and see where these markets want to go over the next few days. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.